Top 8 Financial Myths. You still believe and why they're costing you money. You've been lied to. For years, you've heard the same financial advice, passed down like sacred truth, but the reality is different. Today, we're going to debunk 8 financial myths that are probably costing you money. Let's get straight into it and start changing how you think about money. And if you haven't already, consider subscribing so you don't miss out on more financial content that helps you grow your wealth. Myth number 1. Bitcoin is dead. Every time Bitcoin has a bad day, someone declares it dead. Headlines love to make it sound like the end is near every time there's a drop in price. The truth is, Bitcoin is far from dead. It's just a young asset class, so volatility is part of the game. If you look at its long-term trajectory, Bitcoin has continued to grow, adapt, and evolve. People called it dead when it dropped to $3,000. Now, it's trading at many times that value. If you're in it for the long term, ignore the noise. Myth number 2. You need to be rich to invest. One of the biggest misconceptions people have is thinking you need to have tons of money to invest. That's not true. You can start with as little as $5 or $10. The key is to start. Compound interest is powerful, but it only works if you give it time. Whether you're investing in stocks, Bitcoin, or index funds, small, consistent investments can grow significantly over time. Don't wait until you think you're rich enough to invest. Start with what you have now. Myth number 3. All debt is bad. Debt gets a bad reputation, but not all debt is created equal. There's a difference between good debt and bad debt. Bad debt is taking on loans for things that don't increase in value, like credit card debt from unnecessary purchases. Good debt, on the other hand, is an investment that can grow your wealth. A mortgage, for example, can be considered good debt if it leads to owning an appreciating asset like a house. The key is to understand how debt can work for you, not against you. Myth number 4. Savings accounts will make you rich. We've been told that saving is the key to wealth, but keeping all your money in a savings account won't make you rich. Sure, it's a safe place to store your emergency fund, but with interest rates so low and inflation on the rise, your money loses value over time sitting in a savings account. Investing in assets like stocks, Bitcoin, or real estate is where real growth happens. Use your savings account for short-term needs and emergencies, not long-term wealth building. Myth number 5. Investing is gambling. There's a difference between investing and gambling. Gambling is putting your money at risk with no real understanding of the odds, hoping to get lucky. Investing, however, involves research, strategy, and patience. When you invest, you're making calculated decisions about where your money will grow over time. Whether it's stocks, real estate, or cryptocurrency, the goal is to minimize risk and let your money grow steadily. Don't confuse the two. Myth number 6. Bitcoin is too risky. Bitcoin has a reputation for being risky, and yes, it is volatile. But all investments carry some level of risk. Stocks, real estate, and even cash have their risks, like inflation eroding the value of your money over time. The key with Bitcoin, like any investment, is understanding that risk and managing it. Diversifying your portfolio and investing only what you're willing to lose are important strategies. Risk is inevitable, but it doesn't mean you should avoid it entirely. Myth number 7. You can time the market. Many people think they can perfectly time the market, waiting for the exact moment to buy low and sell high. The reality is, even the best investors can't predict the market's ups and downs with accuracy. What works over the long run is staying invested and making consistent contributions. Dollar-cost averaging investing a fixed amount at regular intervals allows you to buy more when prices are low and less when prices are high, smoothing out the impact of volatility over time. Myth number 8. Bitcoin is only for tech experts. Another common myth is that Bitcoin is too complicated for the average person to get into. While the technology behind Bitcoin, blockchain, can be complex, buying, storing, and using Bitcoin is straightforward. There are plenty of user-friendly platforms that make it easy for anyone to start investing in Bitcoin without needing to understand all the technical details. Just like you don't need to know how the stock market functions to buy a stock, you don't need to be a tech expert to invest in Bitcoin. That's it, 8 financial myths busted. If any of these myths were holding you back, now's the time to rethink your approach. Remember, building wealth is about making informed decisions, not following outdated advice. If you found this helpful, subscribe for more content like this, and drop a comment below if there are any other myths you want us to cover. Let's keep moving forward and building wealth the smart way. The law of the universe operates on a simple but powerful principle. What you give, you will receive in return. When you give freely, whether it's kindness, effort, or resources, the universe mirrors that energy back to you. It's a cycle of abundance, where generosity attracts prosperity and positivity. The more you invest in others and the world around you, the more you create opportunities for blessings to flow into your life. So, by living with an open heart and mind, you align yourself with this natural law, unlocking the potential for success and fulfillment. Thank you for watching. God bless.